Hey everyone, so we all love seeing our investments grow, right? That final number is exciting. But what if I told you that number is really just the beginning of the story? Today, we're going to dig into the real story behind your returns. So let's say your portfolio is up 8%. That's fantastic news. But do you know why? I mean, really, why? Was it because of your genius stock picking? Was it your overall strategy? Or, let's be honest, was it just a little bit of market luck? That's the big question we're tackling. You see, a number like this, plus 8%, it's kind of a black box. It tells you the final outcome, which is great, but it tells you nothing about the process. And believe me, understanding the how and the why, that's where the real learning, the real power comes from. So how do we crack open this black box? Well, there's a tool for that, and it's called Performance Attribution. This is what the pros use to really understand, on a deep level, what's driving their investment results. Okay, so what is it? Put simply, performance attribution is just a way to break down your total return to see exactly which decisions worked and, maybe more importantly, which ones didn't. And it does all of this by comparing your performance to a benchmark, something like the S&P 500. I really like thinking about it this way. It's like you're a detective, and your portfolio is the case. You're not just looking at the final scene, you're dusting for prints, you're analyzing the evidence, and you're piecing together all the clues to figure out exactly what happened and why. Let's try another analogy. Think about a sports team after a big game. They don't just celebrate the win and go home, right? No way. They watch the game film, they break down every single play to figure out what they did right so they can do it again in the next game. That is exactly what performance attribution does for your portfolio. And this really maps it out perfectly. Your portfolio, that's your team. The overall return, that's just the final score. Your asset allocation, how you decide to split your money between stocks and bonds, that's your big picture game strategy. And your individual stock selections, well, those are your star players. The benchmark, of course, is just the opponent you're trying to beat. And this really gets to the heart of it, because, look, a win is a win, and that's great. But a win you can't explain, that might just be luck. A win you can explain, though, now that's a strategy. That's something you can build on. Understanding how you played the game is absolutely everything. All right, enough with the theory and analogies. Let's get practical and see what this looks like in action. We're going to pop the hood and go back to that 8% return we started with. Okay, here is a super simplified attribution report. You can see right away your total return was 8%, beating the benchmark 7%. You won by 1%. But the real magic, the whole story, is in that last column, the effect. It shows your big picture asset allocation strategy added a full 1% to your return, and your individual stock picks kicked in another 0.5%. That effect column, that is the bottom line. That's the part of the game film that tells you exactly which of your strategic plays actually paid off and which ones didn't. It separates what you did from what the market just gave you. And a chart like this makes it crystal clear. You can see the heroes of your portfolio's performance right there. That top bar, your asset allocation, was the MVP. It added a full percentage point. Your stock selection helped out too. But see that little negative bar at the bottom? That's something called the interaction effect. It's a bit technical, but it basically measures how well your star players executed your game plan. In this case, it's telling us that some of your stock picks didn't quite fit your overall strategy perfectly, creating a tiny bit of a drag on your performance. Now, this kind of analysis is way more than just a cool report card. It's totally actionable. This is how you turn those insights into smarter decisions, and crucially, how you start to separate your actual skill from just being lucky. So why do we even care about this? Because it gives you incredible clarity. You learn what your true strengths are. In our example, it was asset allocation. You see your weaknesses. It even helps you have much, much better conversations with a financial advisor. Instead of just asking, so how'd we do? You can now ask, I see our asset allocation worked really well, but can we talk about why our stock selection lagged a bit? See the difference? It all boils down to this really powerful cycle. First, you analyze what happened so you can understand the why. Then, you identify what you're actually good at. And finally, you use that knowledge to refine your playbook for the future. So, based on our little analysis, you'd probably want to double down on your high-level asset allocation strategy, since that's clearly a strength. But you might also take a much closer look at how you're picking individual stocks. This is how it becomes a real blueprint for improving. And that really brings us to the final and most important question you should be asking yourself. Can you confidently say what's driving your portfolio's performance? Is it your skill, or is it just the market's good fortune? Performance attribution is the tool that finally lets you find out. Thanks for watching.